Have you recently registered a business in the Netherlands and you are confused about the difference between the value added tax and the income tax returns? I will break it down in this video in a simple way so you understand what to file and when. My name is Goodness Abara. I am a bookkeeper here in the Netherlands. I help small business owners with their bookkeeping so they can run their businesses with confidence, clarity, and excitement, knowing that their accounting is taken care of. Of the taxes you have to deal with when you register a business in the Netherlands is value added tax, VAT, BTW in Dutch. The value added tax is a tax levied by the government on goods and services. Usually, when you register your business, you would receive a letter from the tax authority. In this letter, you will find your VAT ID. This identifies you as an entrepreneur for VAT purposes, and it means that you are to charge VAT on your goods or service. In the Netherlands, there are major VAT rates. The 21% VAT rate is the high VAT rate, which is applicable to a wide variety of goods and services. There is the reduced VAT rate of 9%. This is usually applicable to food and other select sectors. And then you have 0%, which is applicable to export of goods. As an entrepreneur for VAT purposes, you must file VAT returns. It is commonly on a quarterly basis, but in some cases, it can be monthly or annually. In your VAT returns, you calculate the VAT you have collected from your customers and you deduct any VAT you have paid on your expenses and business purchases. The net amount you will remit to the tax authority or get a refund if applicable. Let's say, for example, you made sales of 1,000 euros. Your VAT on these sales is 21%. It means your customer is going to pay you 1,210 euros. 110 euros belongs to the tax authority. On the other hand, you made purchases. Let's say you bought a laptop for 500 euros. And on that laptop, you also paid VAT of 21%. This means you pay 105 euro VAT on the purchase of the laptop. During your VAT returns, you will deduct 105 euros from 210, and the balance of 105 euros you will remit to the tax authority. You do this through the VAT returns process. You can do it online via the Belastingdienst.nl website. You can also do it automatically from your accounting software. You can also apply for exemption from VAT administration. If your business is small and your annual turnover is not more than 20,000 per annum, then you can apply for the core exemption. If you apply for the core exemption and you get approved, then you do not need to do the quarterly VAT returns until such a time your business grows and your turnover is more than 20,000. Then you have to deregister from the core exemption and resume your VAT administration on quarterly basis. So that takes us to the second type of tax, the income tax. The income tax is different from the value added tax. If you are a self-employed person, N-Manzak, then income tax is applied to your business profit, and this is taxed as a personal income tax. That means your income less your expenses. The difference is your business profit. If you are an entrepreneur for income tax purposes, then you qualify for certain tax incentives that the government gives to encourage self-employed persons. That is the starters deduction, the small business profit exemption, and the self-employed business allowance. These three deductions, you will deduct it from your profit, and what is left is what will be taxed by the tax authority. You will provide all your information in the tax form and the rest will be calculated automatically by the system of the Belastingdienst. There is an online check that you can do to confirm if you are an entrepreneur for income tax purposes. If you do this check and it says, no, you are not an entrepreneur for income tax purposes, then you will report your activities as other activities. You simply provide your turnover amount and you add your expenses on the expenses provided in the tax form. But if you are an entrepreneur for income tax purposes, then you do a more extensive income tax returns for your business. You need your profit and loss account, your balance sheet. You will use the information in your profit and loss account and your balance sheet to fill out the tax form. For example, for the whole year, your turnover was 50,000 euros and you incurred 20,000 euros in expenses and operational costs. That leaves you with 30,000 profit. The tax authority applies the extra tax allowances to this 30,000 and you have a more reduced amount on which tax will be applied. So you want to make sure that your bookkeeping is in order, you recognize all your business expenses, that way you reduce your tax liability. So here are key differences between VAT and income tax returns. Who pays this tax? VAT is paid by the customer. You collect it and pay over to the government. Income tax is paid by you out of your profit. How often? VAT is on quarterly basis mostly, sometimes monthly or annually. The income tax is once a year between March and May. The calculation basis for VAT is based on your sales invoice and your purchases invoice. VAT you collect from your sales minus the VAT you pay on your expenses. This is how you calculate your VAT. For income tax return, it's your turnover less your business expenses, then you have your profit, and tax is applied to your profit. Talk about deadlines. For VAT, you file VAT on a quarterly basis. The VAT for first quarter, you will file it in April. The VAT for second quarter, you will file it in July, and so forth. And for income tax, you file it between March 1st and before May 1st. You can request extension for income tax returns. You cannot request extension for VAT returns. When you file your income tax returns, you wait for the tax authority to reply you in writing before you make payment. For VAT returns, the moment you make the VAT returns, you make the payment the same time within the same deadline. Penalties apply in both cases. If you don't meet up with your VAT deadline, you would incur late filing penalty and in some cases, interest on the outstanding. The same thing applies for the income tax return. There are some tips to help you in managing these two taxes. One is to keep good bookkeeping records. Make use of accounting software to ease the process, especially when it comes to your VAT returns and producing your annual accounts. Seek professional help when you are unsure to avoid running into potential problems. For a more in-depth training on your bookkeeping, your VAT returns, and your income tax returns, I have an online training. In the description of this video, you will find a link to that training. I encourage you to check it out. Keep yourself informed and understand your obligations as well as how to navigate the financial side of your business in order to maximize your profit and optimize your tax position. If you want to continue receiving financial tips around doing business in the Netherlands, subscribe to my channel and I will see you again in the next one.